Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, I want to talk about our disclosures. Any symbols that you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. The strategies we use today are for informational purposes only. Future results are not guaranteed, and any investment decision you make is solely your own responsibility to trade at your own risk. So this is going to be our weekend wrap up for Saturday, June 11th. In each of our videos, we look at the economic calendar, see what happened over the past week, and project forward on what could affect the market the next week. We're going to look at the price action for the past week and come up with key support and resistance levels for the S&P 500. We're going to look at some of the market leaders, Apple, Amazon, Netflix, Priceline. Look at these industry leaders and see what they're doing and see how they might be leading the market up or down. We'll look at the gold and cool charts to see what type of market sentiment we can get from them. And finally, we have an education spotlight at the end. So when we look at the week that was, we see that all three major indices fell for the week. And the major news here is that the NASDAQ now is in negative territory for the year. We are now down 3.3%. So all sectors fell, and we just had widespread selling this week. And as I said, the NASDAQ is now down for the year. The NASDAQ led us up from 2009 rally, and now it seems to be leading us down. We didn't have that much news this week. We all know I'm an Apple homie, so Apple at its WWDC conference unveiled its new iCloud service and the new iOS 5. Texas Instruments entered a second quarter earnings warning. And then Fed Chairman Bernanke on Thursday didn't wow the market as the market's falling. He didn't say anything. He didn't hint about a third round of quantitative easing. And so we basically sold off on Friday. Going into this week, we do have RIM this week. If you still consider RIM a market leader, they have earnings this week. We do have some more news than we did last week. We have consumer sentiment on Friday. We got Philly Fed on Thursday. Even the Empire State Manufacturing. Those have potential to move the market, especially if they're positive and showing anything positive about the economy. Let's pull up the charts and take a look at the S&P 500. Okay, so here we are looking at the S&P 500 on a daily chart, and you can see some of the lines we drew in last week. And look where the market closed today on Friday. Closed right at the support back from January. At this point you had to start thinking that the market wants to come and test the 200 moving average, which will line up with the March lows. So it definitely looks like we're going to test the March lows. The question is what's going to happen from there. Now remember what this March low was a Japan earthquake, and once that was kind of, I don't want to say, brushed over or realized that it wasn't going to impact as much as it was, the market continued right on back up and made a new high. Well, the outlook of the economy is not that great right now. So what's going to be our catalyst to bounce here and go up and test the last swing high? I don't know. We can see on our indicators on the daily, they're all oversold. They're all oversold. MACD oversold, RSI oversold, stochastics oversold. As we zoom out a little bit and go to our weekly, and let's blow this up, we can see that the market is coming into our 50 moving average. Now what's interesting about that is you can see on a weekly that we just got all of our moving averages above the 200, which is certainly bullish. But, again, we're pulling back. And so it looks like the market wants to come down here and test this 50 moving average. If we start heading down to the 200, that's definitely going to be bearish. But on a weekly, although we are heading towards oversold, we are not oversold. So more in the bank to say that we're going to come down here and test this 50 moving average. Zoom out a little even more and go to the monthly. And you can see we have that dual time frame agreement, and our monthlies are just now getting to the overbought level and starting to hook down. So there is a lot in front of us. We basically have multi-time frame agreement, not dual, but all three time frames are showing weakness, and the market wants to go lower. The best thing is once this these really start heading down is to get back to our daily, let our daily get a little, some type of a pullback, and then when the daily heads back down towards oversold, that you have that agreement. But right now, all of our three time frames are showing that there's weakness in the market. We are starting off with Apple as far as our market leaders go, and what we talked about last week was, this channel that goes up and down and tests this downtrend line and comes all the way back down to 330. So when we came up in here last week, we said, well, if the pattern holds up, we're going back down to 330, and that's exactly what we did. Not only did we go to 330, we've come all the way down to the 200 moving average. We could easily draw another one of our price levels here and see where we are. So the question is, are we going to bounce here where we've bounced before and head back up towards this downtrend line, or are we going to break the 200 moving average? Certainly going to be a lot of people trying to defend that 200 moving average. But again, what's in the market that says buy right now? You can see on our market profile that the point of control is now above us. So certainly, we could go with Apple sideways to down. Amazon that was strong after earnings is now setting up a descending wedge here. Certainly looks like it wants to break this key support. So that might be the theme of all of our market leaders, that they're all at key support or perhaps broken. Apple, you can make an argument it broke key support, or you could say it's at key support. Amazon sitting at it, definitely looking weaker. And since Apple's at the 200, will Amazon now make that run from 185, below 185, to get all the way down here to 173 to 200 moving average? Point of control on a market profile is above us. What about Goldman Sachs? Well, Goldman Sachs led us right on down. It has been down for a while and now has been consolidating for 2 weeks, getting closer to the 200 moving average, which could be a short. We're above our point of control. We got volume support underneath us, and it could just be that since they were so far ahead of us to the downside, now they're just consolidating and possibly getting set for another fall down, unless something comes out about the banks. There was some good news about the banks on yesterday, that the capital requirement is not going to be as much as thought. And remember, Goldman Sachs did change itself to a bank as a part of the bailout procedure. Look at Google, kind of looks like Apple, bouncing and now breaking key support. However, if I zoom back out here and match up what's going on here with these swing highs here, that's basically where the market is today. So and look at Google, it's already below the 200. So we got Goldman Sachs and Google already below the 200, looking weak. So and we have our volume resistance point control above us. So certainly weak. Nothing positive yet so far. Let's go to Netflix. It is our shining star, our rose amongst the rose amongst the thorns. Beautiful uptrend, a pullback with the market this past week. Is it a buying opportunity? Well, we can see during this uptrend, the best buying opportunities were the 50 moving average. We took a little heat here. In March, but buy the 50 moving average, okay. Buy the 50 moving average, took a little heat, okay. Buy the 50 moving average, okay. So I would wait for that, but to each their own. The volume point of control is right above us at 262. As I come up here and look, you can kind of see we pull back the 20 moving average, and there is a little swing high in here. But I will see if it can defend the 50 moving average before I would buy, especially in the face of the negativity of the market. Price line also looking good, but setting up this descending wedge type pattern, sitting at a key support level like Apple and Google. We can change our downtrend line to something like this. Descending wedge at key support, volume point of control above us, looking weak. Definitely looks like there's potential for this one to break. 490, 488 here and come down here and test 465, 466. So our leaders, for the most part, are all looking weak, all but Netflix. Netflix is on an uptrend, but has pulled back, and maybe the rest of the market is going to pull back. But certainly our market leaders are pointing us lower. Okay, as we look at gold, the one thing that's interesting is that you would think that with the market dying that there would be a flight to gold, but there really wasn't, so to speak. We are still in our little channel here, 1550-ish, down to 1525. You can see our point of control basically is 1540. We snaked around that, and then once we finally broke below and we came up and tested this volume resistance here, this point of control, and now we're falling back again. So I've been, for the past 2 weeks, recommending that you sit on hands and let gold tell us. If we break our highs here, 1552, certainly we should be testing 1577, our last swing high. We're in an uptrend. Look to buy off the 50 moving average. But for right now, I'm going to sit on our hands. And in actuality, you might make an argument that we're getting ready to really test this auction area and come down here even much more. But I'll be watching what happens at the 50 moving average. Now with oil, we've been talking about the cycle around $100. And that basically remains the same. There's our point of control at $99, and we basically have spent the month of May, a whole month, just trading in this range. Not a lot of trading to do in this. This is a lot of congestion, not really worth your time. Even if we took our downtrend line that we played to break out back up and drag it over to where we are now, you can see that there was a break, but we came right back down. As we move to our educational portion of our video, we're going to talk about and continue to talk about what is the difference between losing traders and successful traders, consistent traders and inconsistent, profitable traders and losing traders. And one thing would be that they work as hard during non-market hours as when they do when the market's open. Too many traders wake up at 9:30 and start trading. You've got to prepare to trade. You got to be able to come up with your action plan and then trade the plan as the market opens. I know when I first started trading way back, trading options, and went to these better trades seminars, and there was one of the leaders, and she used to talk about the heartbeat of stocks. And my point is this: when the market closes, the work is not over. You got to continue to work. You need to come up with your watch list. If you're a stock trader, come up with 10 stocks if the market's up, 10 stocks if the market's down. If even with Forex, come up with pairs that are bullish, pairs that are bearish. Know your support and resistance for futures. You gotta prepare so that when you wake up the next morning and you come before 9:30 and you can see, the futures are up, so I'm going to look at these stocks. Futures are down, I'm going to look at these stocks. The futures is right in between my support and resistance. My bias is. The only way you can have that action plan is if you have an aftermarket routine. Now, I've got videos on the site, pre-market routines, aftermarket routines, all necessary to be a consistent and profitable trader. You can find those videos on YouTube, Move Up with Mike. Our Twitter account is Move Up with Mike, and we have a Facebook page, Are You Financially Literate? So you guys know we got our free 5 video course on how to develop high probability trading setups. We also have a trader's mindset where you can really help overcome your fears, some free reports for you. But we believe that our coaching, holding hand, one-on-one, help you develop a personalized trading plan and help you really build that psychological capital so that you can pull the trigger for your trades. Our great relationship with Global Futures, 20 free trades, and intraday margin of $300 if you click through us. And our charting package works on both Macs and PCs, browser-based, create your scans so that you can prepare for the next day. At the end of the day, scan so you know what stocks you want to look at the next day. In the end, it doesn't make a difference about all these external factors, indicators, trading systems, trading rooms, if you don't pull the trigger. You got to be able to have your own discernment, know what's good for you, know what type of trades you want to take, and then have a positive expectancy that these trades work for me, and over time, the good outweighs the bad. Thanks, guys, and I'll see you next time.